time now for the markets with Leighton, and you say there's a dip in U.S. cotton plantings being forecast.
That is, in fact, what a private survey of producers is indicating. That will be our lead story in a moment. Also ahead in the market segment, strong meal sales support soybeans this week. Pork supplies are expected to increase this year, and volatility is expected in the U.S. lumber markets. We begin in cotton, where triple-digit price gains early in the week gave way to a reversal even before midweek arrived. Dones reported Tuesday the International Cotton Advisory Committee now projects that both U.S. and global cotton acreage will decline in 2015. Meanwhile, a survey of growers by Cotton Farming magazine indicates U.S. plantings will be down 12% this year at 9.7 million acres. Meanwhile, unofficially, there seems to be talk of more acres of soybeans this year. News of an almost 9 million bushel sale of new crop to China on Tuesday helped prices this week. Analyst Tom Fitzenmeyer says between South America and the U.S., there should be plenty of soybeans, which could in the long term drop prices.
We could have 650 million bushel carryout at this time next year. That certainly doesn't support 1050 beans. That baseline report the USDA put out, they predicted an 850 plus. And whatever you say else you say about their accuracy in their report, they tend to be somewhat right on their price projections. So again, I think beans up at these levels, you need to be unloading some of them because there's not a lot of good prospects for them to go up from here and help you out by holding them.
The trivia quiz is about livestock, the pork sector to be specific, and here's the quiz question. How many hogs and pigs are there in Mississippi right now? A, 100,000 head, B, 382,000 head, C, 555,000, or D, over 1 million head? I'll have that answer for you at the end of the markets. A 5-year forecast released by Wood Markets says lumber demand should continue rising with more volatility along the way. The projection notes that North American and global economies are expanding and that they should grow even faster in 2016 and 17. The forecast says this development should allow for record-level U.S. lumber prices in 2017. Analysts say some softness in the feeder cattle market early in the week created pressure across the entire beef complex. I talked to Extension Ag economist Brian Williams about an outlook for cattle as 2015 gets started. Brian, has the new year brought some support to the fat cattle market?
It has. We saw the fat cattle prices tumble from about mid-November through mid-December, but since then they've kind of been on an upward trend and climbing.
Now that Christmas time on-feed report that came out before the holidays, any surprises really in that?
No, it was pretty close to expectations. The end numbers that we saw, placements were, or on-feed, total on-feed was up about 1.4%. Marketings were down quite a bit at 11%, and then placements were down about 4%. But it was all, within what we were expecting.
As far as live cattle, does it seem that there's more focus maybe on the potential for additional price as opposed to what's happening out there right now?
Yeah, there's some of it's being driven by looking forward. There's kind of pull in two directions. On the one hand, we have some positive signs from the economy with the growth in the economy. Lower oil prices mean more disposable income. On the negative side, we're still looking at some uncertainty in places like Europe that could hurt exports.
And as far as holding back heifers, does it look like that's going to be a trend or not? What do you think?
It looks like it right now. A lot of that's going to depend on this spring and how the weather is. We had good pasture conditions this last year. If we have them again this year, it looks like a lot of those heifers are going to be retained through the summer, and we'll see some growth in the herd. Now, the feeder cattle market, we kind of had a pretty significant break back a few weeks in that market. What's going on there right now? Yeah, they did. Just like the fat cattle market, the feeder cattle kind of tumbled through the month of December, but they've kind of bounced back over the last few weeks as well. And some of the factors, there were a couple significant that kind of caused that, right? Yeah, one of them, probably the biggest one, is corn. The corn prices over December had come up, and that really hurts the bottom line for the feeders. And then the other thing is the fat cattle and those prices coming down for the packers. The prices were a little bit high for the packers, and so that brings the feeder prices down as well.
Meanwhile, in the pork sector, the recent Hogs and Pigs report indicates the nation's herd is growing in size. Analyst Virgil Robinson gives us his take on those numbers.
I thought the SEP through November, December through February farrowing intentions were a lot larger than what pre-report guesses would have them be. That suggests to me that as we get towards the middle of 2015 and forward, hog supplies are going to increase pretty significantly versus last year. So those projections by the department of live hog prices averaging something between the low 60s and the upper 60s through pretty much all of 2015 appear to be fundamentally sound.
Before our feature story, let's check the trivia answer for this week. The correct choice is C. The USDA says as of December 1st, the Mississippi inventory totaled 555,000 head. That's an 11% increase from a year ago.